So the whole concept about trading is to find areas where to buy low and sell high. And of course, that's what everybody is constantly looking for when they're trading in these markets, is to identify areas where they may be able to get good opportunities to buy low and sell high. And that's what I'm going to be teaching you today in this YouTube video, using a phenomenon called change of character, where we identify a shift of momentum in a trend to catch the new trend that has just started. And of course, I'll be teaching you step by step, even from a beginner level. So if you're a complete beginner or an intermediate and you want to shift into smart money concept, this is the video that you should watch too. Okay, family, so I want to lay out this concept for you quite clearly so that you may have a clear understanding of it. So just to understand what I said at the beginning, right? To say when a trend is in motion, we need it to change direction, and that's why we want to buy low or sell high. So when we have a bearish trend, and of course when it changes direction, we have what we call a bullish market. In the very same manner, we may have a bullish market, and of course once it changes direction, we have a bearish market. Okay, once we've understood and laid out that foundation, now we need to understand the behavior of the market when it's in a bearish market is that we have lower lows, lower highs, lower lows and lower highs. And of course, the market needs to give us this lower lows, lower highs to break lower lows. And of course, we have this lower low, lower high and lower low. Once the market has done that and starts to give us a change, the first type of sign that we may get is that when the market gets to break the last lower high in a bearish market. So once it breaks that lower high, we refer to it, you and I right now, as a change of character. What it simply means is that the market is changing in terms of trend. So it's changing this or it's breaking this because if it does not break it, then it has not validated the structure in terms of saying it can still go back. If it closes lower, it can still go back to create a lower low because this may be a lower high. So that's why it needs to break that, and we refer to that breaking point as the change of character. Once the market has broken it, of course, we can look for areas to buy the market with a smart money approach. With this very same manner now in a bullish market is that we have the market giving us these areas of higher highs, higher lows, higher highs and higher lows. And of course, we have this higher low and we have this higher high. So of course, once it's broken again, family, I want to repeat this. Once this higher high is broken, then of course that's our change of character, and it's showing us signs that the market is now getting to turn around. So we have a change of character. If it does not break it, that means that we still have the potential of the market going back higher. So that means if the market does this, if it has not broken this higher low, that means it's creating a new higher low from that higher high to create a new higher high. So make sure that you can get to be in the right lane over here in terms of identifying this. Once you've identified the change of character, it's simply signaling to you that we are now in a bearish market because we are now creating a lower low, and potentially you want to enter when it creates a lower high. So you want to sell high, and of course you want to buy low. So it creates a new lower low, creates a higher high. So it indicates to us that we've changed trend, and of course that will be a higher low because you want to buy low. That's what I need you to understand. Now we're going to go to the example that I need you to get this concept, and of course do comment down below. And of course I'm just going to touch on the basic level in terms of how to get it, which supply or demand to trade from, and getting those sniper entries on NASDAQ. One advantage about this, before we can go into the chart, is that you're going to have a higher risk toward ratio. So if you want to catch those long-term trades where you have 1:23 or 1:40 risk toward ratio, this is your method of trading. Okay, and of course don't forget to like and subscribe on this video, family. Okay, family. So I want to bring your attention to this piece of price action right here. And we just want to bring it back to the normal chart. As you can see, originally on the H1. So we're going to be sticking to the H1 time frame. Reason being, I'm just teaching you from my own trading edge. Reason why I believe the H1 time frame is the most perfect time frame for trends is that it's in the middle. It separates scalping and swing trading. So you get time frames that takes place within intraday. So it is perfect for you, especially if you're a person who wants long-term, long pips or long targets, but you don't have the patience to be a swing trader. Perfectly, this is your chart right here. So once you've identified, of course, the trend that was in motion as I was laying it out on, that starts to break it. So as you can see, the market is turning around here. Let me just get some tools to illustrate. The market is turning around. You can see that turn around. And of course, we can identify if we just zoom in into this elegant piece of price action. I just want to zoom it in for those who are using phones. And as we can zoom in into this beautiful piece of price action, we can definitely see that the market was broken right there. If you go to a smaller minute, like 15 minutes, to see that whole trend that has just started on the H1, you can realize we do have the higher high there. So let me just give it to you again. So we have the higher high, we have the lower low, and of course, what has been broken? We have the change of character that has been broken. As you can see, it has been broken by this candlestick. Now, I want to bring more education and more understanding to you in terms of this. Okay, so you can basically take this this last higher high, as I was laying out on that concept, to say we have this last higher low that has been broken in an uptrend to indicate to us a change of character. You can simply you can write it down. Once you've written it down, you can just save it as a template to put it there. Okay, so that's what you can do. So that's what I do most of the time. I just have it saved so that I should not write it every time. Is it a must to write it? No, it's just for illustration and teaching purposes. So we have that change of character that the market has just broken. Once it has broken that, I want to bring your attention to a very important piece of price action in this candlesticks. We can see that what facilitated this breaking of this last higher high momentum that indicated to us that smart money is in. And of course, the last candle that facilitates, or the previous candle before the facilitator, is we can have that candle being our supply, or what we call OB. Okay, so this candle right here is the previous candle that from this one. You always want to do that. You want to look at the previous candle there, you mark it across, and of course what you do is you want to wait for this market to come back to front. And a premium market is that you want to wait for the market to come back above, which is above the 50% into the premium. Of course, where we make you understand when to wait, when to know when the market is going to be turning around. For now, you need to understand you can just simply use this, wait for that setup until it gets to that point. Okay, and of course, what we want to do, we want to mark our definite risk to reward ratio. Okay, you can just put it over here. We can mark it and take profit area. I want to be very much clear with this. Take profit area, you're gonna get those large take profit areas. And of course, you can mark it all the way where you see equal highs. Okay, that's where you can mark it, and you want to be very much realistic. We can see that this level was quite strong, even though as smart money traders, we don't look at trading down tops, but you don't want to be ignorant of them. So you can put that there, and as you can see, that is a 1:19 ratio that we get. And of course, you go back, and we just want to wait for the market that OB, and we will see it right now. So change of character has been broken. We are in a downtrend. Now it's just a waiting game, and as you can see, we will wait, and of course the market came back into it, touched it, and rallied all the way down. Can you see that momentum that got in? And it touched take profit. So we can have this whole area where the market actually came back and it touched that. We had a very small stop loss there. Of course, this is Nasdaq, so you can apply it on any other pairs that you want to trade. Of course, with every strategy is that you want to apply yourself, practice it, back test it, make sure that you don't just go ahead with all the excitement after watching this video. You want to go ahead and apply this, understand it, make sure that you get to write it down. If you don't understand it, comment down below. If you want to go deeper into how you can spot those entries in terms of understanding where is the market, definitely our course has more clarity into this concept. But my learned friends, my YouTube subscribers, make sure that you get to apply this. I'm guaranteeing you profits on top of profits. Anyway, thank you for your time. Make sure to subscribe, like, and also follow this channel for more educational videos like this. God bless you.